Welcome back to the Dukascopy TV studio. Up next, joining me now is Jean-François Owczarczak of Management Joint Trust to discuss some of the big market movements we can expect this week. Jean-François, thank you very much for coming in.
Thank you, Natalie, for having me back.
Now, the big story opening this week really is that Larry Summers has pulled out of that Federal Reserve chairperson race. What are we seeing in terms of response in the markets, do you think?
Well, this morning we had quite a strong response, meaning that Mr. Summers was the more hawkish one of the Fed future candidates. And so we had a reaction up on the euro, reaction down on the dollar. And people are already talking about a Summers rally on equities. So we're going to have a look here, first of all, at the long term to see if we believe it's a game changer for now. On the long-term trends, you won't see the effect yet, but we still believe the trends we had anticipated are still in place. And we're going to look at the dailies, which have evolved a bit, and we're going to look at the levels which would really make this a game changer in future months. So first of all, back to the long-term weekly. Here we are on a selection of assets which represent the world. So we have Australian dollar against the US dollar, risk, well, summarizing risk currencies, commodity currencies, euro dollar, cable, gold, dollar Swiss, dollar yen, the 3 months S&P future and the 3 months Treasury future. And we're going to start with Treasuries for now. They have monopolized a lot of the talk over the last 2 quarters. And Yellen appointment could mean that tapering would have less, or would be less. She would be probably less prone to tapering, and probably advocate for a continuation of quantitative easing in a stronger way than Summers would have done. Well, for now on the weeklies, we're still in a bear market. We're still moving lower. It's only a correction for now, so it's not a secular move yet. But there still is some potential here. I mean, we're still around 131 here, and we think even as a corrective move, it could still go down to the 125 level. No exaggeration yet over the short term, and we believe that we're probably into this downward correction trend until the end of the year. And so, not much of a relief there for now. However, we have reached very low levels on the daily. If you see here, our risk index is in strong exaggeration in the oversold zone and has slowly turned. Our targets had been reached, and there was not much more time in terms of our standardized time perspective. And so we're pretty much well priced to the downside, and we're in a good environment to see at least a correction, a consolidation up here. Now, if we look over the short term, what we really need to see here is that rates, not rates, but here the Treasury bonds could resume the uptrend and accelerate above 131.84 to really generate a strong corrective move up. It's not the case at the moment. I think we'll probably get a bit more insight on what is really in for us with tapering on Wednesday. And for now, it's only a correction up, but it's been well oversold on the daily, so a sign of a relief probably for risk assets over the next few weeks. Now let's turn to equities, and back here the S&P future. Well, we've been bullish the whole way. We do believe that at some point, if you look at the risk index here, we're slowly getting over the long term into a situation which is getting quite expensive. However, our targets are still pointing up, and there's still some potential, maybe 100 points up, maybe a bit more over the next few quarters.
How long do you think then until we could perhaps see sort of a downward movement? Well,
for the time being on the weeklies, it still seems to be quite a strong trend, slightly overbought, but there's another quarter or two to go. However, on the dailies, it does seem like although there's a bit more time to go and a bit more, the targets still have some place here. We believe that towards the end of this month, early next month, we should at least see an intermediate top. So that could probably correspond to the end of a correction up on rates. As previously mentioned, we only believe it's a counter-trend move that we're seeing at the moment. And shorter term, well, it seems like the hourlies are still heading up, and there's still some potential there over the next few days, maybe a week or so. And so had an intermediate top here, slight consolidation, and we will need to see it back into the red and turning again to be able to identify a top here. So we would have another week to 10 days to go, we believe. Now, into our currencies. Well, is it a game changer? Well, first of all, we had mentioned over the last few weeks that euro dollar and dollar Swiss, although euro dollar was in a bull, dollar Swiss was in a bear, it was very much a sideways movement for now, and that since the fourth quarter last year. That is signified by the fact that here you do have a trend indication, but you don't have any targets, and that means both are not synchronized at the moment, which is typical of a sideways movement. Now, which way is it going to break out? That's the main question at the moment. The range is quite wide, and so at the moment we're slowly getting towards the upper end of the range on the euro, and basically that's what we're going to have a look at today.
Something I did want to touch on just for a moment. We've got the news today of Larry Summers. On Wednesday, as you mentioned, we'll hear more from the Federal Reserve regarding tapering. But then out of Europe, we've also got the build-up to the German elections on the weekend. How weighted is this pair going to be? Is it more on euro weakness or dollar strength, or dollar weakness to euro strength?
Well, basically, with what we've just seen with this news this morning and with the economic numbers, which were not that brilliant over the last few weeks in the US, I think a lot of negative news is priced into the dollar, and the euro has benefited from a lot of complacency. And I think the German election did help that, in that no big decisions or no big problems were attended over the last few weeks coming up to this election. So I would believe that we could return to business as usual from next week, and that some of the problems that Europe is facing, and meaning some foregoing of some of the southern countries' debt, may come onto the table again.
They could almost be reawakened once we get that result.
Well, there was also, for example, today some more negative news on wage growth in Europe, which was under consensus. So maybe a lot of good news is priced into the euro. Now, if I look at our charts, I mean, we're still in an indecision zone on the weekly. The dailies have initiated an uptrend again. It's sort of expensive, but not really expensive yet. The targets are quite aggressive, but there's not that much time left to reach them, and maybe I want to focus on this. And we would really start seeing a breakout of the euro if we were able to make it above the levels which have sort of strong resistance over this year. And basically it's this line here coming from the June top, the August top. It's about 134.50. So as long as we stay below that, we'll be prudently bullish, but we won't be able to call a game-changing event here. And so if you see it on the hourly, well, you're in an uptrend, and it's going to be interesting because our targets are pretty much around that level. So if we're able to really make it above that, then the euro has a good chance over the next few quarters. But at the moment, it's still stuck in the range that we've seen all through the summer and actually most of the year. Now, basically, dollar Swiss is pretty much the opposite. If we look at dollar yen, we're still on an uptrend on the weeklies, and we still think there's a few more quarters to go there. The consolidation has been very shallow, although we've reached the targets. There's probably another level of target which is possible. And here also, I mean, if to really see a reversal up here and some dollar weakness, we would really need to see it below 97.77. And for the time being, the consolidation is still quite benign, given the news which was out this morning. Now, last but not least, I just touch on gold. So gold, we're still in a long-term downtrend on the weeklies, and we did reach quite some oversold values here during the summer. Now, we still see the trend moving down, and given the volatility that we've had in this move, the targets are still towards the 1,000. Worse, if we did take the more extreme projection given by our volatility measures, we could go down to 800. Now, let's take the first target here, which is around 1070. So we still believe gold is in a downtrend and probably has a few more quarters to go. Now, the correction up that we've seen over the last few weeks or over the last month and a half basically has done exactly what it should have done as a correction. It went to the upper end of the corrective targets and now is moving back to the downside and what we would call a resumed downtrend. Usually these kind of moves have two heads, meaning that there's a first move up and then a second attempt. Now this second attempt should start quite quickly. If it really doesn't gain any momentum and stays within the corrective targets, we think that the projections that we see here on the weekly are still valid and that we're moving lower on gold. At the moment, and despite that risk assets should get a bit of a lift with what happened, gold is still being sold. And at the moment, we still see another week or so of downtrend here with targets moving below 1300.
Jean-François, thank you very much for coming in. Thank
you for having me.
We'll be back next week to see what more price action we can expect in the FX and equities markets. But for now, it's goodbye.